We've had quite a historic days and weeks. What will be the floor? So we have Bridgewater putting a massive short on European equities. I don't know how you look at what the market will do next. Do we have a further leg lower to go, or can things be stabilized by financial institutions?
Well, my sense is we haven't found the low yet, because you haven't got to the stage of really rapid infection in the US and most of continental Europe, and that's still ahead. So I think in terms of market sentiment, it's going to be quite hard to shake off, if you like, the real world stuff that's happening. And I think this is the real key at the moment, that policymakers can provide liquidity, and the Fed's been doing that and other central banks have been doing that. But this is a real shock, and we need to see signs of the real shock starting to turn around, I think, before the market finds its final floor. Just a bit of extra context on yesterday's move. It was the fourth biggest percentage drop in the Dow Jones index since 1900. 1987 you've mentioned as being the worst one-day drop, the outbreak of World War I, and the start of the 1929 crash. That's the company we're in. The Lehman crisis is about number 13 on that list. We have our own sentiment indicator, and it's now almost 4.5 standard deviations away from normal. In other words, the most extreme daily reading in 7,000 days of trading since 1991. So really extreme market panic. It's a rolling crash that we're seeing here. I think it's very good to see what Macron did, because what you need is some central bank balance sheets to underwrite cash flow in what is a sudden stop in the world economy. And that's really what we need to see everywhere. And I think that's one of the things that will help us find a floor. Valuation obviously helps, sentiment obviously helps, but then we need to see real world effects. So I think that means that the virus spread slowing down.